Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, January 4th, 2019. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, what you'll notice in the ES is that we have taken out the previous session's low and reversed off of that low. We have been holding right at the previous month's close, or right around the previous month's session's close here. So we have two of these closes that are just kind of hanging out and being offered so far. We have a lot of economic data that have come out already, and that is coming out later on. Non-farm payrolls came in at 301,000 jobs added. We still have Fed Chair Powell speaking at 9:15 Central. We also have crude oil inventories at 10 o'clock Central. We have Fed President Mester that spoke just a little bit ago, perhaps providing a bullish or more dovish stance, despite perhaps another 1 to 2 rate hikes coming this year. So we'll see how that plays out. But overall, the market still is trending down. We're still having trouble seeing any kind of participation through the PIMA trigger zone, which is a bear zone at this moment. And for the most part, every time price is pulled back, it has been met with selling pressure. So it is this looks more like an opportunity to watch for rejection and perhaps a push downward through 2435s. That would open up at least a retest back below. And any retest in this zone may be seen as an opportunity for bulls to defend or reject, even if it's a little bit lower here. But overall, the next 50 points or so could be downward easily to test into the zone, and then from there getting below 2400 would open up much more. So 50 to 75 points could be down if price cannot find acceptance above 2500 here pretty soon. And so far it appears like bears are keeping this area offered just now, but we'll see how that plays out. If you take a look here at the NQ, you'll notice the very similar type of price action offered here to begin the month, and now two distinct areas right here that have shown resistance, shown bears defending, and that's between 6280 and 6300. And again, that looks like a great spot here for bears to come in ahead of a potential push through multi-day lows. That would open up again another pullback towards 6K, and if it starts to get below 6K, it opens up much more weakness down below. Overall, we continue to see weakness here. We still have uncertainty moving forward with the China tariffs and how that will continue, but that has not helped anything, including why we sold off yesterday with Apple. So again, all of this right here suggests more weakness unless price can start finding a way to get back above 6500 and holding. That's where it really starts to turn the tide. Otherwise, right now the way it looks, it appears like we may look for another swing move lower. If we take a look here at crude oil, again, this one had been coiling up. It has actually seen a decent move higher here recently. A big squeeze up, a hold for 4 days. I mentioned to watch for signs of rejection, as this might break through 4435s down the road, and instead we're actually seeing strength here today. Inside day yesterday, stop run day, modest stop run day up. However, we got to continue to watch 4760 intraday, 4760. Any failure to hold that level could open up some sort of selling pressure that could lead to a return back down. Remember, this market has had a tough time going up, and the real level is that midpoint right there. Any failure to get really above that midpoint for the month still suggests more downside price action. So again, 4760 will be the intraday level to watch for this one. Taking a look at the YM. The YM had quite a bit of selling pressure yesterday. Big range yesterday from high to low for the most part, 700 plus points, and overall it continues to hold this 22.5 level right here, and that's an LVN right there. It's kind of where the change of bias occurred, and it's still holding that level. So again, there is a shot here that this thing could form a higher low and try to get that midpoint and get the FOMC, but the overall downtrend remains intact. And so even while there might be a short-term move higher in the near term, and maybe it won't even happen, maybe we break right on down through 22.5 right away, but even if we do bounce, I think the overall trend may try to go down there and grab those lows at some point down the road. And so again, that's why 22.50 is going to be very important here near term. Taking that out could open up some downside right away. Lastly, taking a look at gold futures. You'll notice with gold here, again, this one has been nonstop to the upside. At the moment, showing a down day. It's only had one of those a couple of times here in this recent run-up. And so this is still trading completely above the previous month's high and close. And if there is some sort of resistance here, again, this trend has been so strong, you know, it may not come down much more than another day before it pops right back up. This thing has been very, very bullish, and getting in front of this one right now doesn't seem like a good idea. As long as price remains above this 1280 zone or 1270 zone, it could still be headed much higher, even into the 1360. So getting way higher right now, and any pullback could still be a buying opportunity. So this one remains quite bullish. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck. Trade well. Happy Friday. Please like, share, and subscribe, and I'll see you in the trading room.